If you think that silver's run is completely done, well, the history of it may actually surprise you. And here's the crazy thing. What if I told you that any of these 1 ounce silver pieces on the table here is going to be $80 an ounce? Now, that might seem a little insane and a little out of reach, but I'm going to show you why it's entirely possible. I'm going to explain everything in this video, so let's break it all down. Want to win 100 ounces of American Silver Eagles completely free? Well, JM Bullion is giving away 5 full tubes of 100 coins packed in a custom waterproof Pelican case. There is no purchase necessary, and the giveaway ends September 11th of this year. And if you want to get in on this opportunity, click the link in the description below to enter for your chance to win. And just to be clear, JM Bullion is not sponsoring this channel in any sort of way. This is me just wanting to pass this opportunity along to help you guys out. So don't miss out on this. Click the link in the description and enter for your chance to win 100 ounces of free silver. Hi everybody, and welcome back to yet another video. So we all know the saying that when gold leads, silver follows. And that's usually been the trend in the past and in previous bull markets. And there are a couple things that I want to show and go over why $80 an ounce is completely possible. But before we disregard that level of $80 an ounce, I want to go over what has happened when silver does eventually follow gold's lead, because it has done so in the past. So this lead/follow dynamic has been well documented in the precious metals market. Gold will often set the pace for the bull markets due to its large market size, that safe haven status, and the investment focus. And this is that lead portion that we often see, because as gold is usually the first thing people dive into when uncertainty hits. And silver tends to lag initially because while it does have a precious metal role, it's kind of got a bit of a dual role status where it also has an industrial use. So when the markets go down and things get negative, silver is going to follow that industrial route initially, but then it moves much higher and faster than gold does, and that's why you see a lot of market volatility with silver. And we have seen this happen a few times, at least since like around the 1970s when we got off the gold standard. And to be specific, I want to show you exactly when the 3 bull market runs for gold and silver have been. The first one was from 1970 to 1980, the second from 2001 to 2011, and currently we are in the 3rd bull market that started back in 2020. So let's go through each of these different bull markets, and I'm going to show you how $80 an ounce is entirely possible. And we're also going to look at the GSR and where it started/ended during those bull markets as well. All right, so let's start with the 1970 to 1980 bull run. So back in January of 1970, we're going to use this as the start date. So the spot price for gold, we're going to start with gold here, was $35.17 an ounce. And in 1971, of course, we got removed off of the gold standard. So from 1970 all the way into 1980, we saw the price of gold go from $35.17 an ounce all the way up as high as $850 an ounce on January 21st of 1980. So this was the time range of that first bull run. So if we take these numbers, 35.17, and we plug them into the percent change calculator that I have on here, and we take the 850 as the endpoint, that is a 2,316% increase for the price of gold in that decade alone. Okay, so we're going to go ahead and look at silver in that same time frame. And if we start at May 26, 1970, because that was the lowest point for silver, it was $1.57 an ounce. And when we go all the way into 1980, we can see that the high for silver during that time period was $49.45 an ounce. And if we plug those numbers into that same percent change calculator that we had earlier, you can see that silver had an increase of 3,000 and almost 50% in just those 10 years alone. Okay, so let's recap these performances. From 1970 to 1980, gold went from $35 an ounce to $850 an ounce, a 24x growth. Silver went from $1.57 to $49 an ounce, a 32x, which equates for silver outperforming gold by 1.3x in that 10-year period. The gold-silver ratio started at 22:40 and ended at 17:18, only going down by around 5. However, the prices were really the only thing that drastically changed during that time frame. So that's it for the first bull run from what we saw. So now let's go into the second bull market that's a little bit more recent. And this one takes place from 2001 to 2011, which is another 10-year period. Now, a quick side note, I don't know if these bull runs are supposed to be in 10-year increments, but this is definitely something that could potentially be a pattern. And if that is the case, then we probably have another 5 years left of this current run before it begins to decline again, since the latest one has started back about 5 years ago. But again, we might be halfway through this one, but we'll touch on that a little bit more later on. But for now, let's go into the second bull run, like I said, from 2001 to 2011. All right, so let's go into kind of the similar thing, but we're going to kind of go through this one a little bit quicker than the first one. So using the same time frame, the price of gold at $274 on January 1st, all the way up until 2011 when gold hit $1,875 an ounce in September of 2011. Silver went from $4.07 all the way to, here's probably a better graph of that. It went down from $4.05 all the way up to $48.58 in 2011, again in that same time frame. So if we do the same numbers here, let's start with gold. Let's put in 267 for the start price, and then we'll put the end price at 1875, and we will get a percentage increase of 602% roughly for the price of gold during that 10-year period. If we clear it and do silver, let's use this graph right here to make it simple. $4.05 to be the start, and the end price will be $48.58. We get a total increase of 1,000, pretty much 1,100% increase in this time frame. All right, so let's do another recap of the same time period from 2001 to 2011. We saw the price of gold go from 267 to 1875, which is a 7x multiplier, and silver went from $4.05 to $48.58. Now, this was slightly less than its previous multiplier, but if we look at the total outperformance of silver to gold, it went 1.7x, which was higher than the first one of 1.3. And the GSR started at 65.92 and ended at 38.59. So the GSR had a much bigger swing this time around than compared to the first one. Okay, so let's go over the big stuff now. So we're going to bring everything together here. So let's talk about today. If this is the third major bull market for gold and silver, where are we at right now? And how far could it go into 2030 if we follow that 10-year cycle? And I've already showed you the previous data, but I'm going to throw them back on the screen again for you just in case you need a visual reminder. In the first bull market, gold surged 24 times and silver did about a 32x, outperforming gold by about 1.3 times. The GSR dropped from about 22 to 17, which is a 23% compression, meaning silver played catch up quicker. And in 2001 to 2011, gold rose 7x and silver did a 12x, with an outperformance of 1.7. The GSR went from 66 to 39, which was a 41% compression. So let's go to today. Well, I want to start the bull market in 2020, specifically in March of 2020, right when the COVID pandemic hit and everything came crashing down. Gold fell to around 1471, and silver crashed to about $12 an ounce. At that moment, the gold silver ratio hit an all time high of 122, and silver who was historically undervalued at that time. Since then, gold has gone up about 2.3x, and silver has done a 3.2x, meaning a 1.4x performance overall. The GSR went from 122 to 87, which was a 29% compression. So now that we've seen where gold and silver were at in their lows of 2020 and how far they've come so far, the question is, where might we be 5 years from now? Because right now we're a little over halfway through what could be a typical 10-year bull market cycle. And if this trend continues and we finish out the decade with a similar trajectory of the last two bull markets, here's what we could be looking at. Let's say gold ends up doing a 5x multiplier off of their 2020 lows, which is slightly less than the previous performances, since the average of the two would be about a 15x, and I find that to be just a little bit too high. So I'm going to use 5x as a conservative number. That would put it somewhere around $7,300 an ounce. And that might sound crazy, but we saw a 7x move in the 2001 to 2011 and a 20x or more in the 1970s one. So it would make sense for it to hit that price. Now, if silver continues to outperform like it historically has, let's say 1.4x better than gold, which is in line with the previous cycles, here's how the math works. If you take the 5x multiplier on gold, which is what we've already established, and you times it by the 1.4 historical outperformance of gold, you get an estimated 7x of the final multiplier for silver's performance in 10 years. And if you take that starting low of $12 back in 2020 and you times that by 7, you will get silver somewhere around $84 an ounce. And it might even be higher than that. Because remember, in both prior bull markets, silver really explodes in the final few years. So what about the GSR then? Well, if you take the $73.55 price of gold and the $84 of silver, that would be a GSR of 87, which is essentially where we're at today. And the 32% average compression of the GSR has already technically been put in place since its high of 122 back in the year of 2020. That's a lot of numbers, but again, it is possible that we may fluctuate around, but on average, we should trend in those final numbers. 7,300 for gold, 84 for silver, and a GSR of 87 by the year 2030. Now, I don't know if this is correct, and I'm just breaking this down just over the past few cycles, and it's not what I think will happen, nor do I want you to make any decisions based off of this video. I'm just putting together random tidbits of data and playing the what if games here. Can it happen? Probably. Will it? Who knows? I think it's impossible to predict things like this, but if silver does go to $80 or gold goes to 7,300, how would that change your stacking plans? Do you think that it's entirely possible? Again, I don't know. I'm just throwing a bunch of stuff in for you guys just for entertainment and playing the what ifs, but it is interesting to see what the trends have shown in the past few bull cycles and where we currently are today. And if I'm right, then that might be where we end up. Again, I don't know, guys. I'm just throwing stuff in. Let me know what you guys think in the comments down below, and I'll see you all in the next one. Bye-bye, guys.